Good morning, everyone. Thank you so much, Christian, for the invitation. My name is Emilia Vieira. I'm the CEO of Casa, Investimentos. Just before I get into our investment idea, I will borrow 2 minutes from you just to tell you what is Casa de Investimentos. Casa de Investimentos is an independent asset manager. We founded in 2010. Pedro, Hugo, and myself. We manage around 100 million euros portfolio. We are actually, we run it in a concentrated portfolio between 30 to 35 companies. This is a team of 11 very able people, and we are now in the process of launching a fund, a UCITS fund in Portugal. So our privately managed accounts are for family offices, private clients, and institutions. What we try to do is we always try to find patient money. So we try to find people that know what investing is about, value investing is about. So our commitment since the very beginning was with education, as we are the pioneers in Portugal and the only company doing value investing, the only asset manager. So we first published the little book of value investing by Christopher Brown, and we have this year the James Bond here on behavioral investing as well. This is under the name of Biblioteca da Casa, that means house library. We have done several conferences, more than 100 articles and essays written. So our commitment since the beginning with education, because we want to have the right partner to tango, as we normally say. From the beginning, our clients are with a cumulative return of 107%. We are now on the we are with 10.5% for annualized return. This is our risk reward. We find it appropriate as we have from time to time quite a substantial amounts in cash. During this, at this moment, we have around 24% in cash. So let me present to you our investment idea. This is actually an idea researched by Ricardo Santos. He's in the audience. Obviously checked through the team with Paulo Leite, Igor Vieira, that both of, three of them are here, and back there in the office is Hugo Roque, the CEO and founder as well. This is a US global pharmaceutical companies that all of you are certainly aware, headquartered in Ireland for tax purposes. The market cap is around 52 billion, and the net debt of 23 billion. This is a company with sales of 16 billion per year, so the adjusted operating margin is around 7.7 billion. This is a very good cash flow generator and close to 6 billion. And as you can see from these metrics here, this looks cheap to us. So let me take you an overview, a quick overview about the recent past of Allergan, just to understand why probably the price is so depressed as it is now. Allergan got a bid from Valiant at the beginning of 2015. Valiant lost it to Actavis, and the merged company was actually named Allergan and sold the business, the generic business was sold to Teva later the year. A few months later we had a bid from Pfizer from $350 per share. This deal was terminated due to the inverse regulation approved by the US government. So at this time started as well a lot of public pressure on the price of medicines, and the stock still went down. Then we have last year a challenge of patent loss for the Restasis, a best-selling drug from iCare. department. Then we have here, in the past few months, a challenge of a new competitor for the Botox business. This is called the Revance. Now, this is an overview of the vast portfolio that Allergan has. The several areas, the therapeutic areas, the two main areas are those two: eye care, eye aesthetics, and dermatology, and three other strong ones, that is gastroenterology, central nervous system, and women's health. So as you can see, it's around 60 products portfolio. Breaking down the revenue from Allergan, what we see here is almost half of the revenue comes from these two divisions, these two segments: medical aesthetics and dermatology, around 26%, with the blockbuster being Botox, with 9% sales. The Restasis on the eye care franchise and is the best well-known drug. So as we see here, neuroscience, gastrointestinal, and central nervous system, and women's health with good positions as well. Now, taking you to the eye aesthetics franchise that we believe is the best-in-class franchise, we have the Botox that is made out of botulinum toxin A. We have then Juvederm, that is a collection of facial fillers. Cool Sculpting, that is under the brand Zeltic. Allergan, that is a regenerative tissue, and the breast implants. I think it's because of this, the Botox and the breast implants and all of that, that the guys didn't want to present it. Anyway, just to joke a bit. Well, now take it to the products and why we think this is a wide moat business. We see that Botox, the botulinum toxin A, is a very complex and heavy-handled process. It really involves a lot of security and regulation to handle it. There is a strong brand awareness for the Botox, as it really carries the name of a procedure. Anyone that goes for a treatment asks for Botox, never mind if it is the Botox or other competitor. Allergan has a deep-rooted commercial relation with the private clinics, mostly the small ones, with the physicians, and we believe this is a reasonable price for the product. So this is a quite profitable business, and with a very good growth rate runway, around 10% for the next 5 to 7 years. So just to take you a quick look through the Botox sales over the past 10 years, the average growth was around 10. In the past 5, it picked up to 12.4%. And to show the stickiness of the Botox, the survey, recent survey showed that 60% of the people never use the brand, or they would ask for more than 50% discount to do so. So this makes a fantastic brand, very strong brand, with a proprietary formula and a very good distribution network, and we call it the Coca-Cola of eye aesthetics. So as the Botox gives the name to this procedure. Now, coming back to the best-in-class aesthetics franchise, let me show you that probably most of you don't know that the Botox sales, the therapeutics is actually the most important one with 55% sales, but we are now taking a look to this side of it, that is the aesthetics franchise with 46% sales. This is 1.5 billion annual sales. The cost of a typical treatment that needs to go for refilling, literally, is around $300. Every 3 to 4 months need to be repeated. Allergan is a dominant player with more than a 70% market share, and it has two competitors, the French Disport and the German Xiaomin. But even pricing it 20% lower, they do not dent the leadership of Allergan in this one. So Botox owns the market for small clinics with these very strong relations to the physicians. We see as well the demand growing in all the demographies. This is a product that before was more used between 40 years and 60 years old for women. Now we see it rising on women under 30 and over 70 and men. So, gentlemen, welcome to Botox. Now, just breaking it down in numbers, and we estimate that from 2018, the sales will be around 4.2 billion. This is with a profit margin of 55% and gives us an operating income of 2.3 billion. Now, if we take the company, actually does not disclose this in separate for separate segments, but if we take in a pro rata basis, interest expenses and income taxes, we do have a net income of 1.8 billion. Now, if we take here a positive, we are looking to a business that has very strong profit margins, that has very good runway in terms of growing, the market growing for this. So this means that we think, if we look to the French L'Oréal cosmetic company or to the German Beiersdorf, we see them pricing. They do not grow at same rates. They are not as profitable, and they trade in the market above 25 times multiples. So we just took here what we find a reasonable name for a high-quality business that, in fact, is for the top of the class. So it's actually for people with wealthy people, and we believe that it's not so much price sensitive. So this gives us $120 per share only for this part of the business. So what you can see is that the aesthetics franchise, that is the Botox, the Juvederm, the tissue, and the cool sculpting, breast implants, this alone accounts for $120 per share. Now, there is a threat to the Botox, has been on the news in the past few months. Last week was on the Financial Times. Vieira is a Silicon Valley company, is now testing the product with its name, is on phase 3, and it claims that it has a longer lasting effect. It can last for 5 to 6 months, and they believe that at the end of next year, they can have a drug out. Our assessment, and reading vastly about it, looking to this recent survey by Bernstein, what we think is, knowing the complexity of this toxin, what we believe is that long duration, listening to doctors' interviews and all of that, long duration stems for high concentration of the toxin. So this means that maybe there are here security risks, and even if they get approved by the FDA, nobody knows in what terms. So we don't see as well what is the incentive for physicians, because they charge for each application. So we don't think they will be here incentivized to work with other products that asks the patient or lets the patient away for longer. We don't see it here as well. The Bernstein survey shows, even though that they run it for 100 of the biggest US clinics, shows that people to change would need a discount 34% of people willing to change would need a discount above 30 to 50% to change. So we see really a stickiness in this Botox business. The aesthetics consumer care about brand. I don't know if you recall some time ago the breasts that explode on this French brand, and this was very well aware for most people. So they do care about brand and they prefer to pay. So it's not so much price sensitive. This is how we see it. So there is risk, but we believe that the risk is not so much on the aesthetic side of the business for Allergan, but is more on the therapeutic applications, as we will see. Now, Time came last year with a cover saying that Botox has 800 patents registered. This is the Swiss Army knife of the medicine, as they say. It allows to treat everything. So most of the Botox application for aesthetics, it came just by chance. It was discovered because this drug started to treat, to strengthen muscles around the eye, to treat cross-eye problems. And it ended up erasing the wrinkles. Now, what we see is that more than half of the Botox sales are used in therapeutic treatments, as I told you, around 55%. The usage in these neuromuscular disorders, migraines, urology, many doctors claim as well it behaves very well when treating depression. Some think that can be a blockbuster there as well, but that is not proved yet. So, but they are working on it. More price sensitive is certainly this area because it's prescription based. Obviously, is more sensitive to pricing, and we believe that the competition could have here a higher impact. But this side of the business, the therapeutics application is actually expanding at a faster rate than the Botox, the aesthetic side of the business. Now, if we do the same exercises before and taking it to the therapeutics standalone value, we see the sales for this year around 2 billion euros, the operating profit margin of 60%, so it gives us an income about 1.2 billion. Again, taking proportional expenses for interest rates and income taxes, this gives us a net income of 900 million. So here, as we have a challenge from this Revance if it comes to market, but it is price sensitive. So what we find very reasonable here, and just in line with some of the big pharma names, we think it's reasonable to assume here a multiple of 15. So this would result in would give us $41 per share. So if you just combine these two businesses, you have the aesthetic side with 120, you have the Botox therapeutics with 41, and this is the market price today. So those two businesses combined just justify current price. So what do you get for free? What we think we get for free is a very decent pharma business, and with some threats, but with a very promising pipeline. So we have the eye care franchise, gastrointestinal, central nervous system, and women's health. We have obviously some problems here, Restasis, loss of exclusivity, and some competition in smaller products. The sales should see a double-digit decline, as we expect, to 9 billion due to this Restasis franchise loss of exclusivity. But we believe that from 19 onwards, the new pipeline of drugs will more than compensate for this. Now, looking to the patent portfolio overview, this is what is at risk now. So, taking here taking here Restasis and all the smaller medicines, we see here 1/5 of the revenue can be at risk in the near term for this year. And by 2022, we'll have here a 2 billion loss. So those two combined can be around 5 billion, just taking the whole of Restasis case out. Now, what we see is, last year, when it was challenged, the Restasis patent, what we saw is the management did not react so well at the beginning because they just sold the patent and leased it back. They tried to sell to a North American tribe, native North American tribe, to be isolated from this challenge, but that was denied by the court, and the management just accepted that it has competition on the Restasis, and obviously the drug is now, they have to deal with competitors, but despite of believing that the drug might have some resilient here, we think we just remove it completely from our projections. Now, this is the Allergan pipeline. This is considered to be a 6-star drug pipeline, and as you can see, up to 220. Up to 2023, we have 7 new products coming out on phase 3. If we look back to FDA phase 3 drugs, they have an approval rate of 40%. So we believe out of here, the company believes that can be between 7 to 13 billion. We take a more conservative approach, but believe that can be 4.5 billion, and this would replace and stable the pharma business. Now, the pharma business is a $2 billion per dollar earnings business. There are obviously this Restasis concern and the Botox we don't know yet, but it's a strong pipeline and is supported by R&D expenses of 13% of sales. Now, just as a conclusion, and just despite of its murky financials, what we see here is Allergan has a very strong free cash flow, and if you see it here, it's just close to 6 billion per year. So if you obviously take it to discount for amortization and impairment, because company had a past of a strong acquisitions activity, but obviously taking this out, we see a very good cash flow generator. Now, what we see, just to conclude my presentation, we see a strong aesthetics franchise. The Botox is a very important brand, is very strong. The therapeutics franchise is coupled with a very good and decent pharma business. The company, we believe, is poorly understood with these murky financials. There are near-term setbacks on the Restasis case, as we see it. On our numbers, we just took it all out. There is the revenge threat, but we believe that there is stickiness and a very good wide moat in most of its products. So this is a high-quality business with a growing consumer franchise that we think is worth above 20 times earnings. And if we take the pharma business with 15 times earnings and we compare it to today with 10, that is the number at which the company is trading, we believe that the market is just focusing on the negatives and forgetting a very good business. Thank you so much for listening.
Thank you. Thank you, Emilia. Any questions for Emilia?
Please, if you
thank you very
do
much.
have questions, the easy ones, ask them to me. The difficult ones, ask them to Paulo, Igor, and Ricardo, because they are sitting there, so they are happy to do it. Please, Stephen, yes.
Just a quick one on, I thought, but I agree actually with almost everything, but isn't there a risk on the medical use of Botox? Isn't there speculation, and I don't know the story that well, but isn't there speculation that it's basically being a bit abused and it's actually being reimbursed through the insurance company and it's really actually an aesthetic product?
I'm sorry, Stephen. Could you say
One more
that,
time.
please?
Yeah, so isn't the medical, the non-aesthetic use of Botox, which is a fair chunk of their revenue that's growing actually quite quickly, isn't there some suspicion that that's actually being used to get the insurance company to reimburse the patient for it, but it's actually an aesthetic use instead of actually the migraine or the medical use? Do you know?
We don't know, as you said, it's probably speculation. We don't know about that. No, I don't think so.
But am I right? Isn't that the fastest growing portion of the Botox line item is actually the medical, quote unquote, migraine use?
Well, what I think is any doctor can prescribe a drug even when it's not approved for that illness or for that purpose. The company cannot advertise, and in past Allergan was fine by that, but the doctors can prescribe the medicine, and Botox has been by chance discovered to treat several illnesses. As I find that the Time article very, very interesting to explain how many doctors they surveyed and talked to talk about this, and I believe it has quite potential, but I don't know. It has always some speculation. We just like to stick to very good and strong numbers, as we see in the company, and to what we feel is a consistent pipeline with very good products. And in the pharma business, we always know that patents can be disputed. So we believe with a very good, the company is actually moving away from a more acquisitive mode to in-house investing and having their R&D strengthened and mix a bit both. So we believe the company can bring something new out and
they've actually had, no, I agree, and they've actually had a very good history of capital allocation, right? So,
they do.
Yeah. Thank you very much. Obrigado.
Thank you.
Anybody else? No? Thank you very much, Emilia.
Thank you.